markets, speculation, and risk. This is the Chat with Traders podcast, hosted by Aaron Fifield.
Hey, what's up, everyone? Thank you for being here. This is episode 168. If you've been rolling with me since day one, or if you've been through the archives, this week's guest will be no stranger. It's the options madman, Anand Sanghvi, or best known as Mr. Sang Lucci. Lucci was a guest on episode 8, which came out in 2015. Of course, there's been plenty happening since then, so we took this opportunity to catch up. Topics of discussion range from life in Puerto Rico, dealing with taxes as a trader, a failed hedge fund even, what's been working for Lucci in equity options, and how he's continued to evolve in recent years, plus a whole lot of thoughts on trader psychology throughout. This episode also has strong language throughout, so if you've got kids in the car, you have been warned. Now there's plenty to get through, so I won't hold things up any longer. Let's cut to the chase. Here's Lucci for another installment of the Chat with Traders podcast.
I see you jumped in head first then on the trading, huh?
Kind of, yeah. I mean, I've dialed back the podcast a little bit and predominantly trading now, yeah.
Yeah, how's that going? Is it for a firm over there, or are you just by yourself?
So I think I told you a little while ago that I got a gig at a prop trading firm here in Sydney.
Yeah, it was a couple of years ago or something. You had told me that.
Yeah, it was about this time last year, actually. So,
okay.
Yeah, it was kind of short-lived. I was there for about 10 months. I wrapped up at the end of August.
Got you.
Not by choice. The firm actually winded up closing the doors.
I'm not surprised.
Aren't you? Why? Why do you say that?
No, the models just don't work anymore. It's just not, you're not ripping that much for commissions, and then your traders are not making enough to get a percentage of. So the model of the prop trading, it doesn't make sense anymore because the commissions are all going down to fucking zero. I mean, I don't know what you were trading over there, but I'm assuming it's across the board. Same thing happened in America too. Like, it's only the bigger shops now that are just swallowing up all the small ones. And then what they do to subsidize, because there's no fucking commissions, they create their own ECNs. They create their own routes. So what they do is that all the traders that they have under, let's say they have 1,000 traders, they push all the flow to the ECNs, and then they get paid. They get paid on the dark pools. So that's what they do now, and they scalp the shit out of their traders too.
What do you mean they get paid on the dark pools? By rebates?
Yeah, no, well, not really. It's just like, you know how the payment for order flow works. So basically, like, there's an exchange that they also own that they'll push all of their trader flow against. So, and then they'll go out and sell that to high frequency trading firms and to, whoever the fuck wants the data. So that's another thing they do. And then they scalp their traders. So they take the other side of their traders because they know their traders are getting smoked. That's what they'll end up doing to make money now. And then they'll sell education too. Previously, they never did it. They would give you the education. You would learn how to trade, and then they'd take 40%, whatever of your money, and then they'd also get a huge commission rip. But commissions are going to fucking nothing. So, and then they got no good traders. So I'm assuming the same shit happened to you. What happened to that firm?
Well, I guess our situation was a little bit different. I think it sort of works a bit differently here in Australia. But the firm was predominantly trading futures.
Yep.
So everyone was trading mostly like bank bills and government bonds here,
Gotcha.
or treasury bonds. But I actually got hired there not as a trader. I got hired as trader manager.
Yep.
So initially I wasn't doing any trading, but for the past for the few months towards the end there, I was doing a bit of trading, and I'd actually it was my incentive to get the equities set up at the firm.
Sure.
So, yeah, we actually started trading equities towards the end there. And then when they closed the doors, I've just continued doing that at home. So,
nice.
Yeah, just backing myself and having a crack. But it's kind of, I've been involved in trading for a while now, but the sort of trading I'm doing at the moment, I haven't had a lot of experience in, so I sort of feel like I'm quite a newbie at this point. Because I've been out of the firm now probably 2 or 3 months.
Yep.
And then I was only trading at the firm for about 2 or 3 months towards the end there. So I'm still kind of working things out there on the, the discretionary intraday type of approach.
Yeah. It takes a while to find your niche and find what you're good at, find what product works for you. I mean, if it's futures, if it's this, plus in Australia, I'm sure, there's a lot of different opportunity. The markets work a lot differently than the U.S. market. So it takes a while, man.
100%.
It takes a while to find your thing.
Yeah. Still trying to nail down my edge, but I'll get there.
Indeed.
Yeah. So how you been doing? I see you've moved to Puerto Rico.
Moved to Puerto Rico, man. Moved to Puerto Rico, and I would say probably June, I would say. But all throughout the year, I've been thinking about it. Even end of last year, I was thinking about making the move, of course, and then Maria happened. The hurricane happened, and everything just got kind of quiet. And then all of a sudden, there was just a big resurgence of they even made the laws a little bit easier for people to come down here. There was a couple of changes that happened. And basically, you just have to prove that you don't have that much attachment to the United States. So your primary home, has to be here in Puerto Rico. You have to live here for 183 days, a certain other couple provisions here and there. But then you get to take advantage of some serious tax breaks that, let's face it, can help you build some serious wealth. So for personal capital gains, we're talking about 0%, bro, and you don't have to pay the federal income tax. So, let's say you make $1 million in the States, you're paying $400,000. $400,000. You're writing a check at the end of the year for $400,000, and again, you make that kind of money and you're self-employed. It's not like you're really ballparking for taxes. So come year end, you're just writing this check and you feel like shit. Over here in Puerto Rico, bro, you're paying nothing. You're 0% on the capital gains, which is ridiculous, man. Which is ridiculous. So I kept looking at it and I was like, dude, I'd be stupid not to do this. I'd be the dumbest motherfucker in the world if I didn't do this. So that's it. I just grabbed everything and I just bounced, bro. I bounced. I moved everything down here, all my trading accounts, addresses, all the businesses that I had, a couple of LLCs that I had. I moved everything down here, man. So yeah, I'm in Puerto Rico for at least 183 days out of the year, and then back in the States for the rest.
Yeah, okay. And you were in Boston prior to that, right?
Yeah. I was in Boston prior to that. I'll most likely head back to Boston, January, February or so, and then we'll see where the next move is.
Yeah, nice. Well, I totally understand why you made the move. I actually know of a couple guys who have moved to Puerto Rico who were prior living in the US, and obviously for the same sort of reasons.
Yeah, there's a ton of crypto. Crypto guys are down here. Those are the ones that you'll see the most with. So people who have, who have taken, the blockchain technology and tried to build product and are trying to build products around it. So either security products, data products, education products, you name it. Everything with anything with the blockchain technology behind it. Most of those folks are coming down here to work on it and to build down here. Also, too, most of the folks that are invested in crypto, as you have seen, of course, Bitcoin crashed, all the altcoins, anything that you had in crypto is worth 95% less than what it was worth 2 years ago or whatever the hell it was. So everybody here is just waiting for it to bounce back, because when it does, obviously they'll take their gains tax free. So there's a lot, there's a huge crypto community down here, and they're all getting together to talk blockchain. I hear that shit every day, man.
Have you been getting involved in that? Did you touch it during the whole crypto mania we saw? What was it, end of last year?
Definitely. I put like 30, 40 grand in it, right? And like overnight, I mean, it felt like overnight, but maybe it was like a month or 2 months. My accounts grew to probably like $250,000, almost like 300,000. And I took, I took my principal out basically, maybe a little bit more than that. And then I just left it. And I just threw in a bunch of coins that I thought, the companies were sound and all this kind of stuff. And then the shit just crashed, man. And so my crypto accounts are worth absolutely jack shit right now, bro.
So
I got
funny?
Smoked on those.
Yeah. Oh, you're not the only one. I actually cashed out of all my crypto literally yesterday. I was like, I've had enough.
Painful. Now, I mean, at this point, after this last flush, there's so many people that I actually went to a crypto event down here in Puerto Rico the other day, and there's so many people just distraught. They're just asking each other, what should we do? What should we do? What should we do? What should we do? Because everybody down here is waiting for it to come back. So, it's just one of those things where the market dictates, and there's still more pain to be had, and that's just the way it is, man.
Yeah. Oh, at least you didn't put your whole life savings into it, and I only had a little bit in it as well. It was just a bit of fun, really.
Indeed. You know what the problem was for me? It was like we gotta wake up, right, and trade the U.S. markets, right? So I'm up at 8:00, and I'm up looking at things. I'm trying to figure out what I'm doing for the day, and the day is so stressful, right? 4:00 comes around, then I have maybe a couple hours, eat some dinner, chill out, or whatever, and then as soon as China woke up, that's when the crypto stuff would go crazy. So I'm up. I was up at like midnight, 1:00 in the morning, 2:00 in the morning. Then 4:00 rolls around. I need to get some sleep. Then I'm looking at futures. Dude, it just got too fucking crazy for me, bro. It got too crazy for me. I was like, dude, what am I doing? Like, I make enough money trading options. I don't need to be trading some of this stuff. I mean, it's cool if I own a couple coins here and there, but this is just too much to handle. So either I need to pay somebody to manage my portfolio, or I got to get the fuck out.
Yeah, totally.
That's what ended up happening for me.
Right. Now, you said in Puerto Rico that you're not paying any tax at all, or that you don't have to pay any tax at all. Do they get you in any other areas? Like, is there a catch somewhere else?
Oh, I mean, 100%. Okay, so let me explain this, right? So you get 0% capital gains, and that's for personal. So anytime you flip a crib, or you sell some asset, or obviously you're trading and all that kind of stuff, that, as long as it's under your personal name, is zero. It's taxed at 0%. Now, for a business, you'll get a 4% corporate dividend. So that means that, if you get cut out a dividend on your business, those will get taxed at 4%. Now, if you're the owner of a business, you also have to pay yourself, though, a salary, right? So that's one of the things there. So, and then the tax down here is 20%. So let's say you have a consultant business that brings in, I don't know, $1 million in revenue a year. You have to pay yourself a salary that is commensurate, and they do the same thing in the States too, by the way. You got to pay you got to pay yourself a salary that is commensurate with your job title. So let's say you pay yourself, $100,000 a year, $150,000 a year. That'll get taxed at 20%, and then the rest of the gains here you're going to take as a dividend. Those will only get taxed at 4%. So that's the sweet part when it comes to the businesses and the capital gains. Now, the catch is, and I guess you could call it a catch, but it really just is the nature of being in Puerto Rico. The sales tax is through the roof. I mean, it's double than what it is in the States. So, for example, like if you buy a car or if you buy anything, food, whatever the hell it is, you're paying an 11.5% sales tax. So, that's tacking on a good amount of money to anything that you buy. So furniture, fucking lotion, man, whatever the hell it is that you buy, you're paying an 11.5% sales tax. Now, as far as real estate, though, real estate is cheap. Rent is cheap down here. And then since it's an island, though, similar to like Hawaii, you could say. And when you go to Hawaii, when you visit Hawaii and you go to Honolulu, you're like, wow, this place is amazing, but it's the most expensive shit in the world because, again, like all the food is imported, everything is imported. So a fucking Toyota Camry costs another $10,000 on top of what it usually would. A Lexus car, a Mercedes or whatever. Like there's huge luxury taxes that are getting thrown on these items just to get them down here for people to buy. So yeah, when you look at things from that perspective, there's a little bit of a catch there. But again, if you're cleaning, a couple of million a year, the taxes that you save well compensate for whatever the hell you would buy, down here.
Yeah. So the main appeal is definitely the 0% on capital gains.
On capital gains, exactly. So that's why Paulson, you'll see him on the news all the time, and all these other hedge fund guys coming down here and buying up land to build hotels, to build this, to build that. They're all putting these businesses under the tax acts down here in Puerto Rico, and supposedly they're talking about closing up some of the personal stuff. So that personal cap gains thing, they're talking about closing some of it up. So we'll see. But that's the advantage of being down here.
Right. Now I'll ask you this question because obviously it sounds as though you've done your homework on this subject and you've looked into it a bit. I occasionally get emails from people who listen to the podcast asking me about ways to minimize your tax as a trader. Now, I never really give an answer because everyone's situation's different in every way. And it also depends, obviously, on where you're living and what states you're in. And there's so many different factors. So I normally just say, go speak to an accountant who knows about this stuff. But, just because obviously you've looked into it, are there any little tips or tricks you can share just as not advice, but just things which you've picked up?
Yeah. I mean, this is a huge problem for every single trader. I mean, this is a monster problem for every single trader when it comes to for them to come to tax time and try to figure out what they're doing. I mean, number one, you're self-employed, so there's a self-employment tax. That if we're talking about just the United States, and again, for other countries, I'm not too aware of, but in the United States, you got a self-employment tax to worry about. Then you have a max of $3,000 in losses that you can deduct against, some of your gains. And then there's a rule called mark to market. It's an election that you have to make and file for. It's called mark to market. I forgot what the number is, but I would suggest anyone who is an active trader who makes more than, I don't know, I think it's like 100 trades a year or some shit like that. You can apply for this election, and then that will allow you to take all of your losses against whatever you have, So if you have another job or if you have another business or whatever the hell it is, you can deduct all those losses that you're taking, which is a big deal, for active traders here. So they make a distinction between, just sort of an investor and an actual professional trader or active trader. And it's like a certain number of trades per year. And then on top of that, it's like, a lot of traders don't trade under an LLC or don't trade under a business entity. So when you trade under a business entity, you can expense a lot of things, right? I mean, you can deduct against it your home office, your computers, your internet connections, your friggin' cell phones, whatever, all that kind of stuff you can sort of deduct against your gains as well. But again, for anybody that trades for themselves for their own account, I mean, it's a tough thing, and it's tough to tell a trader, bro, that they need to park some money away for taxes. Like, what are you gonna do? Like, let's say you make $40,000 in 3 months, right? You're telling me you're gonna tell a fucking trader to take $20,000 of that and put it in a fucking bank account? Like, he's gonna laugh at you. What trader would do that? Because all that trader is looking at it is like, okay, now I have more money to trade with, and now my ability to make more money is there. So why would I take money out of this account to to park it for taxes? Because I got 9 months on this money. Every trader thinks they're the best trader in the fucking world, right? So they don't want to park 20,000 or whatever it is in a bank account and hold it for taxes. But that's the reality of the situation. You got to be able to do that, because by the time year end comes around, let's say you're up 200 grand and you got positions, you're trying to roll into the next year, you're trying to do all this kind of stuff. You're not ready for that tax bill to come along. You're not ready for that tax bill to come along. And so, April 15th comes around, or you want to file an extension, whatever the hell it is, you're not ready to take all that money out that account and start putting it towards friggin' taxes. You're just not ready for it. So that's the unfortunate part for most traders in the States. That they don't think about taxes until it's too late, which again, that's everybody. That's everybody, and that's the problem with taxes right then in and of itself. So I looked at the situation. I was like, you know what? I don't look at taxes until it's too late too. So why don't I move to this place where I don't have to pay fucking shit and I don't have to worry about this? So that's kind of the way I looked at it.
Yeah. Now you kind of described two different situations there. So trading as an individual with a personal account and trading under in the States, as you call it, as a business, an LLC. Obviously, there's more costs involved, I would presume, in running a LLC. Like, I don't imagine it's free. At what point does it kind of make sense or become viable to switch from being an individual trader or trading through your own name through trading through a business?
Through trading through a business, I mean, I would say it's when you're taking it seriously and you're an active trader and you're spending money for that particular business. Let's say you're spending money for automation. Let's say you're spending money to go on meetings. Let's say you're spending money to stay in a hotel, to go to Traders Expos shit. Let's say you're doing all these things. You're taking it very seriously. So as soon as you cross over that sort of threshold where you are now, a serious active trader here that has expenses here when it comes to trading, I think that immediately, right then and there, pay the $500 to set up the freaking LLC, whatever state you're in, and start trading under that. That's it. Because you never know where it could go, Aaron. That's the thing, man. Nobody ever knows or is going to plan for something down the future. Like, bro, my trading has evolved so much from when I worked at a firm or when I was just trying to trade, just to make a little money. I mean, it's created so many ancillary businesses. It's created the need for automation programs. It's created the need for, other people to help me too, other, maybe assistants, this, that, or whatever. That's a business, bro. That shit is a business. So you got to start looking at it like that. You got to look at these things like 5 years from now, 10 years from now, what are they going to look like?
Would you say that you would at least need to be reasonably profitable to go down this path before?
Definitely. Actually, no, not at all. Not at all. That's a common misconception, I would say. It's just a point where you're deciding to take it seriously. That's it. Because then all of those losses or any of the issues that you're having, all the expenses and all that kind of stuff, when it comes time for taxes, it's going to look great too. I mean, the losses are going to help you out. They're going to help you out. And you're going to be able to deduct all that against other income that you have, and your tax situation is going to look better. So yes, it sucks to take a loss for the year, but shit, if you got another business or you got another crib that's bringing you money from a 2-family or 3-family or something like that, or you have a secondary business, all that helps. So no, I don't think you have to be reasonable profitable at all. I just think you gotta take it seriously. That's it.
Okay. And just to reiterate again to everyone who's listening, this is not advice. Speak to an accountant, but hopefully you can get a couple ideas from this.
Indeed.
One of those other businesses that you kind of mentioned there that trading has led you into has been starting a hedge fund.
Sure.
Now I know there's been a few changes since probably when we last spoke in 2015. I think you were sort of getting things up and going then.
Yep.
What's the latest on that?
Yeah, so that hedge fund in New York that we had when we went ahead and spoke that first time, that hedge fund closed down. That hedge fund closed down. We had to close it down. Our biggest investor pulled out, and then it was just kind of like, the incentives weren't aligned, and I was in New York living a crazy lifestyle. And I think I would say I think the pressure got to me quite a bit. And, we had a couple bad months. One of the biggest investors pulled out, and that was it. We kind of just decided to close it up. And I went back to Boston sort of with my tail between my legs kind of thing. And, I kind of just had to work back, not really from ground zero per se, but I just kind of had to work back on my own. And I started to kind of create a different way of going about things. And now I'm looking to start a new one down here in Puerto Rico, but with a much less riskier strategy and with a lot more automation behind it, a lot more hedging strategies behind it, just a lot more risk management in general. I still trade like a crazy asshole, completely on my own account, but since we're trying to grow with investors and build over time, especially build down here in Puerto Rico, this is a much more different type of endeavor, as you said.
Okay. So did that catch you by surprise in some way, or did you sort of see that it was on this trajectory at some point?
No, it definitely did. It definitely did catch me by surprise per se. I never really thought that I would get into, more algo-based strategies. I never really thought that I would even get to, really, really thinking about hedging, and little things like that. But now, like, I'm able to trade size and just basically, and I'll give you a couple of examples as we go on through the, through the interview or whatever. But I'm able to trade size and just hedge in and out of these big positions and stay with my core positions. So I'm making money on the hedge, and then I'll end up okay on the larger position. So my strategy has changed immensely from when we spoke, 3 years ago to where it is now. And going forward too with the automation, it's only going to change and change and change alongside with the markets. And I'm excited.
The fund that you had set up and it's been shut down now, what type of strategies were you trading? Like, were you the sole trader, or were there? I believe
I
you were
was the sole
working with a couple
trader.
Others. Okay.
Yeah. So there was a couple other guys there doing.
Algo stuff?
Basically so we had our main fund, which was just me trading, and that was just me doing my insane, options trading, which I still am doing to this day. I had a couple other guys working with me. They would do investor relations and a little bit of risk management, but we tied a couple other businesses in as well. So I had a group, running 3 different businesses, and then I was the main trader for the hedge fund. And that's basically it. So the main strategy was long options. It was predominant. I would say it was 95% long options. And by the way, this is the big difference here. Now I'm like 50-50. I'm actually like 60% short options and 40% long options. And back in 2015, I was literally 95% long options, bro.
This episode of Chat with Traders is brought to you with support from LinkedIn. For entrepreneurs, business owners, and pretty much anyone who is involved in hiring, you know very well the right hire can have a great impact on your business in a good way. But where do you find the right hire? Where do you find the right person for the job? In the past, job boards were likely the go-to. But that's a strategy which relies on hoping that the right person will stumble across your job. Because how often do you actually hang out on job boards? So don't leave finding the right person to chance when you can post your job on LinkedIn, a place where people go every day to make connections, grow their career, and discover opportunities. It's the best way to get your job in front of people who are qualified and ready for something new. In fact, 9 out of 10 LinkedIn members have said that they are open to new opportunities. Discover why a new hire is made every 10 seconds on LinkedIn and get started. Get over to linkedin.com/chat and get $50 off your first job post. That's linkedin.com/chat to get $50 off your first job post. T's and C's apply. Well, should we get into a bit more about how you're trading nowadays?
Sure.
So obviously you've been on a bit of a roll lately. Let's just talk about what's been working for you.
Yeah. Obviously the volatility, man. The volatility. Anytime there's momentum, that's when I come in and just destroy shit. Especially if it's momentum on the downside. So you have these names that have just been so bought up, and these valuations are so incredibly ridiculous. To give a stock here that exemplifies that is the Nvidia. That stock was worth, I don't know what, $26 maybe 5 years ago. The shit went to $300, and now it's trading a 50% discount. When people were putting, $500 price targets on it, $350 price targets on it, $400 price targets on it, so these valuations just got absolutely insane. And finally now, people are just starting to book profits. But unfortunately, in a market like this, where everybody is so sitting on the bid, once things change like that and there's no bids for people to get out on, and there's so much supply out there that wants to go ahead and book profits, or let's say they got hit with a margin call or whatever the hell it is, you get these big momentum changes. And these stocks now have, like this Amazon will have a 100-point day. Literally every single day. It moves 100 points, almost 75 to 100 points every single freaking day. And names like a Netflix moving 20 points, 30 points every single day. So that momentum is just literally my lifeblood. You know what I mean? So as long as there's momentum, I know immediately if I'm wrong in a trade, if there's momentum. You know what I mean? If there's no momentum, you're sitting there in la la land. You're just like, well, am I right? Am I wrong? What the fuck am I going to do? That kind of thing. And then when you're in a long option, and you're stuck in, let's say, chop, or you don't know what the fuck is going on, all your option is going to do is just lose value. And for anybody that doesn't know, how options work, there's a big time component to it. There's a big, what they call theta. There's a big perception thing to it, where if you're long an option, and let's say you're out of the money, a call or a put or whatever, as you get closer to expiration, that thing is worthless. That thing, generally speaking, is worthless. So I need a momentum type market. And honestly, I think that's what happened too to the old fund. And that's the reason why I had to close down there too. The volatility just kind of stopped. And once you're going long options, let's say 95% of the time, you better get the freak out quick. Otherwise, that option's going to zero. So that's another reason why I shifted to literally 60% short options and 40% long options. The only time where I'm going long options now is when shit's going crazy. Is when, SPY has a huge range, S&P has a huge range, and, I can rip 5 points in Netflix in 5-10 minutes, or I can rip 20 points in Amazon in 5-20 minutes, So that's the only time I'm going long options. The rest of the time, I'm selling everything. I'm literally selling everything. So anything out of the money on all of this shit, all of these large cap names, I'm just selling the shit out of all of them. And if I'm wrong on the writing side, I'll hedge a little bit to stay in it. I'll work in and out of that short option, and I'll come back to on the short option. So that's kind of how I'm really protecting my account with the writing strategy more so than anything. So, that's kind of how I'm able to just stay where I'm at versus before, bro. I would be up like $1 million in a month, and then the next month I'd be down $250,000 or down 500,000. And then the month after that, I'd be up 600 grand. The volatility on my P&L and my account in and of itself was insane. And now what I'm able to do is just tone it down a little bit, because I'm just writing so much on both sides of the trade and then hedging in between, taking directionals only when I need to, only when these things are moving. And then obviously if I do get caught in something, I'm able to hedge out of it. So that's kind of what's been working for me. But again, the volatility alone here is making people a lot of money, or it's losing people a lot of money.
No doubt, yeah. I liked your analogy of if you get into a trade and you find there's no momentum, you're kind of just sitting there in la-la land and you're going to get out. When you say you're going to get out, how quickly are you getting out? Like, are you trading still intraday? Like, are you going home flat at the end of the day, or are you saying I'm going to get out over the next couple hours if nothing moves, or I'm going to get out in the next couple minutes?
So it's a tricky thing, you know what I mean? It's a very tricky thing. Another thing that I've changed from 2015, 2016 is that I'm trading around core swing positions, which is something I actually picked up from a couple of my users or a couple of my subscribers, I should say, in my chat room. Guys that I've been trading with for years. Some of these guys are much better at it than I am. But basically what I'll end up doing is swing trade in a position, and then I'll just kind of trade around it for for intraday or for the weekly moves. So to answer your question, if I'm in something and it's just not moving and I need it to move right then and there, I'm out very quickly. I'm out very, very quickly. At least this is when I'm on top of my game. Sometimes you're just sitting there, watching these things burn, and you can't really react, and you're ending up taking a decent loss. But usually, I'm out immediately. If that thing isn't moving and I need it to move ASAP, I'm out immediately. As far as holding overnights, most of my positions here, they'll be done within like a day, 2 days, maybe 3 days max. Very rarely am I holding something for, let's say, 3 weeks or 4 weeks. There was a period in time where I was short the market and I was babysitting positions for like 2 weeks, but for the most part, I'm in and out, within 2 or 3 days, something like that,
And it sounds as though, anyone who's familiar with you probably knows this already, but the types of options and the names that you're playing in, they're all these very big names, like almost like high beta stocks, right? Is that kind of where you specialize?
Yes, 100%. I've never moved from these names since probably 2010 maybe, or 2009 or 2010. Like, I trade the same shit over and over and over every single day. I trade S&P. I trade I trade all the banks. I haven't been really trading banks lately, but I'll trade all the Teslas, the Netflix, the Priceline, Google, Nvidia, AMD, Apple, Facebook, Microsoft, all of those same names, and I'll trade them over and over and over again. And now more so than ever, though, like, it's the best time to trade these, because when you get a 4-point range or 5-point range in Apple, it's so thick. The options are so thick. You literally can put $500,000 or $1 million in an Apple option and be fine. You'll be able to get out of it. You'll literally be able to get out of it. Whereas, back in 2015 or back even earlier than that, you put that kind of size on, there's targets on you. There's literally bullseyes printed on you. And these market makers, they know immediately, like, who you are, how much size you have, what they need to do to get you out of these things. Like, they know where your stops are and all this kind of shit. It's difficult. But now when you get this kind of momentum, fucking forget about it, man. I can put $250,000 in Apple in literally a couple of minutes, and I can take it out in a couple of minutes too. Which is a big deal for me, and that's always been my my appeal sort of to the options and the types of stocks that I trade. I'll trade a little bit of equity these days, though. I will trade a little bit of equity, though, on some crazy names that, some of these weed stocks that everybody keeps talking about. Like, if I can short some of these things, or, I'll trade a little bit of equity here and there. But for the most part, I'm sticking to the high beta names, obviously, with thick options, where basically I can put some money to work and not have to worry about liquidity and things like that.
Yeah, okay. So is that why you are focusing on those names? Because the options, that like the book's a lot thicker for options on those stocks as opposed to, some of your maybe smaller name stocks?
100%.
Okay.
100%. 100%. And now, like, as your account grows in size, obviously you have more options, and then if you switch from, a Reg T margin account to a portfolio margin account, you have a lot more options. You have a lot more leverage. And with that leverage comes obviously great responsibility because you still have to manage that leverage. But it also does come with a lot more options. You can hedge an options position with stock if you need to. You can sort of lock in gains if you're long or short an option, and you're not quick enough to get out of your whole size. You can start hedging to lock in gains. You can do a lot of cool things as your margin goes up and as your account size goes up. So, of course, you can always get into other things, but my primary business is always, and always will be, just the fat options on, some of these big names out there.
I noticed you've been talking a little bit about hedging. Let's drill into that a little further. Can you give an example of how you're hedging some of your positions? Like, what are you actually doing there?
So for let me give an example. Like right now, I'm swing long Tesla. For some reason, like I feel like it can go over $400 in the next 6 months, let's say, right? So I have $400 strike calls for March out to 2009, right? Or sorry, 2019, and the stock's trading like 340 right now. I don't know where it is. It's just been in a range here. I would say from like 330 to 350. So I'm sitting there adding to my swing long, but like, it's not going anywhere. So I'm losing money on the option, no matter what I'm doing at this point, and it's not going straight up. Plus the market looks like shit anyway. It looks like we're going to drop even more. I know I'm going to lose money on this Tesla, in the short term, while I figure out where my the right price on that option will be. So as I figure that out, I'm going to be down, $5,000, $10,000. I might even be down $20,000 on that position. So in order to hedge this, I can look at the tape and be like, all right, this thing's obviously not fucking moving right now. So what I can do is I can go to a weekly option and I can sell out of the money calls, let's say, because I know it's not going higher just by looking at the tape and by looking at the market. We're still trying to go down right now. We still haven't hit a low. Whatever that, maybe when we hit a low, people will start coming back and buying Tesla. So for now, I can go to a weekly, even this week or next week or whatever, and then sell a shorter weekly call against my long dated options. And I can collect, let's say $1, let's say even $2 of premium that will basically add income and basically stomach the losses that I'm going to take, that I know I'm going to take on my swing call, while I try to figure out where the fuck I need to buy more of that Tesla. You understand what I'm saying? So as each week goes by, I can sit there and just collect income, and then all of a sudden here, when and if this Tesla does decide to move, I think I needed to go over like 360 or something like that. Then it's like, okay, clear out all the short options and let this long option run. You know what I mean? So I'm able to make money on that position while I have this core position of where I believe, it can go and what I believe it can do. So that's kind of a good example here of the hedging. And, there's more examples I would say on a daily basis. Like sometimes if I'm making a weekly trade for time decay, sometimes I'll short options on Amazon, let's say 70 points away, 80 points away. And obviously Amazon is fucking insane right now. I could be totally wrong on my entry. What I'll do is I'll take a long option to hedge my short option because I know I'm going to see a directional, and I'll try to make 10 grand, 20 grand, 30 grand on a long directional while I'm getting absolutely smoked on my short call. And then I'll literally book the gains for the long option. And then once that thing is ready to turn, I'll start leveraging back into the short option. And then I'll make another 30 on that one, or I'll make another 40 on that one. So that's kind of what I'm able to do. Previously, I couldn't do that. My mind was too focused on one thing, and it couldn't look at the bigger picture, basically. So it's a lot of decisions to have to make, within a short period of time. And my mind needed to get some practice just to figure out how to do it.
If we just go back to this Tesla example you gave.
Sure.
That kind of sounds like that's a longer term trade for you.
Yes, absolutely.
Okay. So this might sound like a bit of a silly question to yourself, but I feel as though there will be people listening to this kind of wondering the same thing. Why are you holding this core position in Tesla now? Like, why don't you wait until it moves?
Great point. I mean, at any given moment, I might have an idea, I might have an instinct, and that's all I go on, right? I mean, I have been trading for, I don't know, like 12 years to a decade, a little bit over a decade now. Whenever my instinct says to go for something, and that's just what it's going to do. So the reason why I'm in a swing is that slowly I can really build a much larger position, and I can sit there and basically just allow it to do what it needs to do, and then make sure I'm there when it actually makes that move. Too often, what happens to me is that, let's say if you try to go for too much of a short-term trade, you end up getting shaken out. You end up getting shaken out pretty aggressively. Even if you were smoking right for the last 2 weeks on your short, do you know how many people have fucking lost money shorting this particular move down? And you want to know why? Because we've literally had like 50, 60, 100 handle rallies literally in a day where they've been totally right on their short, but they just got caught in the wrong place at the wrong fucking time, and then it's literally the squeeze from hell happens, and that's it. Your options are worth fucking nothing. But if you have a little bit of time on these things and you're able to kind of slowly work into these things and hold them a little bit longer, that's when you're going to get paid. So I had a short on Boeing. I hit this thing at like 365 when it first came off the highs, but the shit I had to hold through was insane, man. And if I had a weekly or too much of a short-term time frame on it, I would have missed it. I would have missed it completely. I would have missed the whole freaking trade. So that's kind of something that I'm doing a little bit differently. So with Tesla, for some reason, they want this thing. I don't know why, but every day I look at this thing and I'm like, okay, this shit's not getting punished like anything else, right? The earnings came out on that Tesla. This thing went right back to 320. You obviously saw when, he's on Joe Rogan smoking weed and shit, and the stock goes to 260, and then all of a sudden the earnings come out and it's right back to 340, 350. So I'm looking at it, I'm just like, something's different. This is different. I don't know what the fuck is going on here. So as long as they hold this thing up, I just want to be long this thing. And I know I need time on it, so I'm like, fuck it. Let me buy a March. I'm going to just keep adding one contract here, one contract there, and then I'll try to collect some income against it. But I just want to be long Tesla. That's it. I don't know why, but this is just what my mind is telling me. Now, if the thing goes back to freaking 320, sure, I'm going to be wrong on this trade, and I'm going to have to take a loss. But instinct is instinct. That's it. I go with the gut, and that's it, bro.
But
That's
that
it.
loss is going to be smaller than it would have been if you weren't running this hedging strategy.
Much, much, much smaller, dude. I mean, if in the past I would have gotten stubborn, that's the other thing. There's a fine line, bro, between instinct and then being stubborn, right? So the gut will tell you like, hey, you know what? You should do this. And then boom, you'll start hitting buttons because of your instinct, and that's great. But then emotions start coming into it, right? And then once the emotions start coming into it, that's when the attachment happens. That's when the mistakes on your decision making happen. That's when the stubborn shit comes out, And that's when you start justifying shit that you shouldn't justify, right? Meanwhile, your instinct is telling you to get the fuck out, but you're too stubborn to figure it out. Plus, you're looking at your P&L. All kinds of shit are happening to you that you don't want to control, or you're allowing to control your decision making. So this is what has sort of hindered my progress, I would say, and I would say for most traders, this is one of their biggest issues, if not the biggest issue. And hedging plus coupled with going long options much less than I was before. These things are helping me make money, but not only make money, bro, and even more importantly, keep the fucking money that I made. And that's one of the biggest things that I think I've overcome here over the years, is just ways to keep the money that I'm able to make. versus going out there and damaging myself because of stubborn shit, because of expectation, because of behavioral mistakes, because of all this bullshit that has nothing to do with fucking money or the market, letting all those things dictate your decisions. So 100%, bro. I think the hedging has got me to this place.
When we're talking about hedging, obviously you're trading a decent sized account. For someone who might be a little bit newer to the game, let's say that, I don't know, let's not put a number on it. Let's just say they're trading a much smaller account. Is hedging a good strategy for someone with a smaller account, or is it something that you're having a larger account affords you to do?
So, having the larger account affords you to do a lot, and it honestly even affords you the ability to even think about it. I mean, if you have a $5,000 account or a $10,000 account, yes, you can do it, but remember, it's like, where are you trying to go, right? Where are you trying to go, and how quickly are you trying to get there? These are the questions that so many traders are going to ask themselves every single day. So it's like, okay, let me start with a $5,000 account. Well, what is my goal here with this $5,000 account? Most people who start with a $5,000 account, let's face it, their goals are to make $100,000, to make $50,000, to make something that actually means something, and hopefully keep it going. With that in mind, most people don't have a long time horizon. You know what I mean? Most people who come into trading, they'll take their $5,000 and be like, okay, let me trade some crazy fucking penny stocks. Let me trade some crazy ass options. And, I heard my friend here make $50,000 in a month. I'm going to try to do the same thing, and to those people, and again, those are most people. Those people are not going to hedge. There's no benefit for them to hedge. There's no benefit for them to look at the market like that, because all they want is some crazy weed stock to go from fucking 50 cents to $8 with them and their whole account in it. You know what I mean? So it comes down to your time frame. It comes down to how disciplined you want to be. It comes down to, how long you're giving yourself to do these kind of things. So hedging is always a valuable instrument. It's always a valuable instrument to understand why. And I wish I did more of it, obviously, when I started out trading, or even was trading big accounts back in 2015 and back in 2009, back in 2010. But everybody has their trajectory. You know what I mean? I always knew about it. I just never put it into practice because, call me thick-headed, call me stubborn, call me whatever it is. I just never was there. And all the things that have happened to me thus far in my trading have brought me to here now, and that's why I'm hedging now, So to answer your question, with the small account, there's always value. There is huge value in being able to hedge and being able to stay alive, and that's what hedging will allow you to do. And more so for me than anything, all I got to do is stay alive until the volatility comes around. Because when the volatility comes around, I'm always proven to come out, guns blazing, Aaron. You know that too. It's why we're having this conversation right now. My guns are fucking hot, man. Them shits are hot right now. You know what I mean? But what did I have to do to get here? What did I have to do? Look at all the shit I had to do to get here. And staying alive is so important. And staying where you're at is so important for me. So I'm starting to learn those emotions. I'm starting to learn those strategies. I'm starting to learn all that stuff now after, going through all the crazy shit that I've gone through. So, I would say advice here for some of the traders here with smaller accounts is think about it. Fucking think about it. Try to incorporate it into a couple of your positions, especially if you guys are, trading hype, just crazy weekly options, and your account has so much freaking volatility. You have to accept that volatility as part of the game, or, you can kind of switch to, a little bit lower paced, but it'll at least protect yourself. So that you're not freaking waking up one morning and your account is blowing the fuck out, man. That's a shitty feeling.
Yeah. I think this next question probably ties into a lot of what we're talking about here. You're talking about instinct. You're talking about, sometimes being thick-headed, being stubborn, etc.
Sure.
How do you know when to push it and when you should be pulling back. Like you talk about, you've got to not destroy your account waiting for those times to roll around. In your case, when the volatility picks up, that's when you really want to push it.
Yep.
How, for less experienced traders, what would you suggest for them for how they should think about when they should push it and when they should maybe take their foot off the gas a little bit?
Sure. This all has to do with finding who you are as a trader, finding what strategy works for you, and finding when it works for you as well, and then also when it doesn't. So, I mean, Aaron, you remember the period between what 2000, I don't know, we could call it 2000, actually, since the market crashed till what, last year? Middle of last year? Like, what was the phrase that everybody posts on Twitter every single fucking day, Aaron? What was it? It was buy the fucking dip, right? It was BTFD for literally 6 years in a row. And then I think lately, maybe after 2015, after 2016, that's when the tech stocks really just started going crazy. So I want you to tell me, like, how many people did you see on Twitter think they were the king of the fucking world and just the genius of trading because they made crazy money just buying every single dip, right, on all the tech names? I mean, you and I both have seen tons of people pass through our world, that have done monster things with their account, right? Even newbies who come out, with a $10,000 account, all of a sudden they're up $200,000 because all they did was what? Buy fucking Amazon every single time we had a dip. Buy Nvidia every single time we had a dip. Buy AMD every single time we had a dip. And where are all those people right now? You don't fucking hear a word. It's like a fucking graveyard, bro. You don't hear a word from them. And then all of a sudden, you know what the shitty part is? Is that they lost all that. You know what I mean? Most people lost all those gains there. They're trying to figure out, like, okay, this is it. This is the dip right here. Let me go ahead and buy. And then all of a sudden, the worst shit happens, and that's it. Their options go to fucking nothing. And the worst thing is that the behavior at that point you can't control. So you're going into it with more money, right? You're going into it with even more money because you got to make your losses back. You're attached to where you were, and then that's it. That's how you get these blown out accounts, and that's how you get these margin calls through the fucking roof. And what I'm trying to say is that, whatever strategy it is that works for you, let's say it was buy the dip, it's the realization, and trust me, your instinct is going to kick in, and it's going to be like, dude, this shit's not going to work. But again, if you're stubborn about it and, you're just starting to throw money at it because you want to get your account back to wherever the hell it was and back to, you being in the promised land or whatever the hell it is, that's where things are going to bite you in the ass. So it's really understanding what your strategy is and who you are and what your goals are, what your purpose is, and sticking to those things, which is extremely, extremely difficult to do. I've shown as well through my whole career as a trader, it's difficult for me to do that. And I constantly look for new ways to figure out, like, okay, how do I just stay alive? All I got to do is stay alive here, and my market will come around. The right market will come around. So all I got to do is scratch out a little shit here and there and wait around for my market. So to answer your question which was, how do you know when to push it? It's really more so understanding yourself than anything, man. And that is an inward process. It's not a market thing. It's not a thing where you can just be like, all right, today I'm going to come in here, I'm going to try to make some trades. They're not working. Okay, I'm going to step back. Those kind of things. It's really an inward. It's really looking inside. It's really like, okay, you know what? Right now, this market is not working for me. I'm going to go ahead and reduce my size. I'm going to go ahead and try to do whatever I can here just to either not trade or, scratch out a little bit until my time comes around. But dude, I'm not going to sit here and say it's an easy thing. I'm not going to sit here and say I have figured that shit out, because I fucking have not. But I do know one thing, Aaron, is that even though, let's say the momentum disappears now, I have other strategies now. I got other strategies to play when the market is dead, let's say, or it doesn't have the momentum. There's other things that I can roll into. There's other strategies here that I've collected over the years and I'm able to execute. So that's kind of where I'm talking about as far as hedging. So Aaron, when I say hedging, I'm not talking about purely just hedging an options position. I'm talking about hedging my fucking life, bro. I'm talking about finding ways to hedge my actual life, my emotions, my mindset at the time. Let's say I'm going through some shit outside. How do I stop it from affecting my account? So many things. So when I say hedge, I ain't just talking about the trade. I'm talking about hedging my fucking life and hedging who I am as a person. Because I know in certain situations, yes, I might get depressed. I might get too zealous. I might get too all over the place, and I want to do everything at one time. These are things that naturally happen to me. Every year, every couple of months, who knows? So it's just acknowledging like, okay, I'm going through this phase right now. How the fuck do I protect myself from myself? You know what I mean? That's all I think about now. Because I know I can make the money, but now I just got to figure out like, okay, how do I protect myself from my own dumb fucking ass? Which, if that makes any sense to you, it's like protecting the devil inside of you, bro. Protecting yourself and what you have from the fucking devil inside of you. Does that make sense there, Aaron?
It does make sense, yeah. And you know how I phrased the question? I said, how do you know when to push it? You kind of described it as like, this is my market, like when it's your market.
Exactly. And by the way, everybody else knew it was mine too. So even if I didn't know it was mine, which I already did, like everybody in my world, in my space, in my chat room, on Twitter, everybody was just like, dude, what the fuck are you doing right now? Are you going? And again, like it just reinforces. It all just reinforces. And for me, like I was sitting here waiting for this. And I caught SPY at like 388, 387. And that's when everything just really started to unfold. And once I saw the signs, that was it. I mean, you couldn't stop me. I put it all in there short, and it worked out pretty good.
What do you mean you put it all in there short?
Well, it's like kind of a people love to say I went all in. I didn't really go all in, but
this was going to be my question. Like,
sure.
When you know you've got to push it, it's also not a reason for you to become reckless, is it?
True. Okay, so that's a great because you don't know. Sometimes you feel it, and then you want to go heavy on it, but you get attached too. That was another one of my biggest issues, right? So if I wanted to make a big trade and I felt it, right? And I felt that my instincts kicked in. It was like, yo, this shit is about to happen right now. Just go. And I would press the button. I'd get in there. But you constantly have to be there to make sure that, hey, this is actually unfolding here. And the second it doesn't, you got to be ready to pull that stuff out. You got to be ready to cut that risk off. You have to be ready to shut that faucet off. Because if you're not, especially in the option space, and again, Aaron, this is why I moved to 40% long options and then 60% short options, because most of the time in the options world, most of the time you buy a fucking option, that shit's going to zero. If you hold till expiration, the shit's going to zero. If you are a long and out of the money option, whether it's a put or a call, the shit is going to fucking zero. The odds are the shit's going to zero. So if you're going to make that bet, you better be fucking ready, man. You better be fucking ready. And that's been my life, obviously, for the last 5-7 years. And again, only now that I'm really moving towards mostly short options. So Aaron, what'll happen is that most of the time I'm just short, right? And then all of a sudden, you'll start to see shit in that option. Whatever you're shorting, you'll be like, whoa, the market maker is moving differently. Volume is coming into this thing. Something is different. And then you'll go back to the stock, you look at the tape and be like, all right, this thing looks like, whatever you're watching here looks like it's ready to move. And that's when I'll come in and make a directional play, because I have some data behind me. I have something behind me. And then I'll go super heavy, but again, you're talking about the fine line here between knowing it's your time and then recklessness. You know what I mean? And it's like in trading here, there's always that fine line. There's always that fine line between conviction and too much conviction. Too much conviction to the point where you get attached to that position and you can't bail. You know, so I always use the movie, the Heat reference. You know, what does Bobby De Niro say to Pacino? He says, don't get attached to anything you can't walk out on in 30 seconds if you see the heat coming around the corner. You know, so it's the same. It is the same shit. We live on this fine line, especially if you guys are trading options. We live on that fine line. So all I'm trying to do, I recognize now that fine line more so than anything, from a behavior standpoint, from a tape perspective, from a market maker perspective, from all the people that are involved, from emotions perspective. And it's like, okay, where does everybody exist on this line, and who's gonna fall? Who's gonna fall? And that usually dictates where these stocks are going and who's caught on the wrong side, and all this kind of shit that is helping me figure out like where my strategy is and where do I fit, in this whole world kind of thing.
Yeah. All right, man. Well, we're pushing on an hour here, but there's another subject which I'd like to ask you about, and I know it's something you've got a few thoughts to share on. The future of trading. And
sure.
That might be the future of trading for you, or where you see things changing for a lot of people as we move forward. But I know you've got some ideas around more on the hybrid trading type of approach, if you will, or utilizing technology to save you from yourself in some ways. So, what are some of the things you're working on in that regard?
Sure. So first I'd like to just preface this by like giving a little bit of a backdrop. Like, we went through a period of high frequency trading, right? I mean, after 2007, and don't you find it crazy, bro, that nobody really talks about high frequency trading anymore? Like, Aaron, have you talked to anybody that talks about it? I mean, granted, you get people on your podcast and everything, but it's kind of like a thing of the past. No, I mean, people don't really talk about it anymore.
Well, I don't know. Has it just become more accepted?
It's definitely become more accepted, and it's definitely become a part of how exchanges work and how people execute orders and things like that.
I also think it's maybe more people have become to understand it a little bit better. Like when it first started getting thrown around, a lot of people thought it was this mysterious kind of, what is HFT? People are just skimming the money off the top everywhere.
Sure.
And now they actually understand what's going on a little bit better.
Yeah, now we got Robinhood. Now everybody's trying to expose Robinhood for how they make money. I see that new, it's like, what do they call it? The freaking clickbait shit. I see a new article coming out, how Robinhood is able to charge commission free and all this kind of stuff. You'll see shit like that. So again, like that's one side to what people thought the future of the markets were going to be. And now you look at this quote unquote market crash that everybody's calling, which to me is the dumbest shit I have ever heard. People calling this a market crash. Like, nobody complains when Boeing or Amazon has 100-point fucking up day, but it can't, God forbid, it has 100-point down day. Like, it's a fucking market crash. That shit always got under my freaking nerves. And people just trying to figure out, like, okay, why is this market working the way it is? Should we bring back the uptick rule? Should we stop all these short sellers? And all that damn rhetoric comes back as soon as the market comes down. But I say this to say that, a lot of people thought high frequency trading and faster speed and all this kind of stuff was going to be the future of the markets. I don't think that's where it is. I mean, I think I don't think they're efficient at all, but I think the markets are very emotional. I look at it from that perspective. I think all markets are super emotional. If you look at sneakers, if you look at fucking tickets for concert events or for Red Sox games, if you look at Bitcoin, if you look at all the damn altcoins out there, if you look at any auction type of market, they are dictated and guided. Oil, they are dictated and guided by a lot of emotions, and as well, like who's positioned on the wrong side of the trade and who's going to get screwed out of their, out of their positions because they're holding too much and they don't know what the hell to do with these things. So those couple of things, behaviors and emotions, I believe, are the controlling factors. Now, what do we also know about retail traders? Their largest issue and the reason why they can't make any fucking money is what? Behaviors and emotions, right? So I believe that we're going to be in a world of hybrid automation here, where you as a retail trader, you're going to come to terms with the fact that you suck at certain fucking things. You already know you suck at these things, but you have no solution, right? And the previous solution was go full automation and try to go ahead and work it from that angle. But Aaron, what did we figure out? We even heard of funds that were completely automated blow up completely. How come they blew up, bro? I don't know. Frankly, because somebody else's code was better and code had to just keep adjusting. So you're only good. You know how they always say you're only good as your last trade. You've heard that, right?
Mm-hmm. Yeah.
And with the high frequency trading and the coding and the programmers, you're only good as your code. So as long as your strategy made money, let's say it was for a year, let's say it was a couple of years, you still had to update that code. I invested, bro, in 3 algos from people that were very, very respectable in the high frequency trading community as programmers from desks from very respectable banks. And Aaron, I want you to tell me how many of those you think actually made money. How many of those you think I didn't lose my ass from? Three. Well, how many do you think? What? You think I made money on 1, 2? What do you think, bro?
Well, I feel like you're going to say 3.
None.
All 3.
None. I lost money on all.
That's what I meant. Yeah, you lost money on all 3. Did you make money for a certain period of time, though, before you lost money? I made money
for a certain period of time, 100%. I made money for a certain period of time on 2 of them. And, they showed a great track record. They showed, amazing percentage gains, all this kind of stuff. Investors were happy. Everybody was happy. And then all of a sudden, something happened, right? The market changes. The same shit that retail traders have to deal with. It's the same thing that the programmers have to deal with as well. Something changes, maybe a rule changes, or somebody else is trying to scalp the same edge that you're scalping, so that edge is no longer there anymore. Well, goddammit, if that edge is no longer there anymore, what the fuck are we gonna do? We gotta come up with either a new strategy completely, or we gotta compete against this other code. There's too many moving parts, just like retail traders. So if there's all these people here that are still playing this game of the markets, I think the real solution, okay, and it's not even really a solution, but it's just more of you being able to survive as a trader and you being able to, keep your account, basically keep yourself afloat until your market comes along, is how do we change behavior? How do we get one leg up on behavior? So I'm looking at it this way, like the future of retail trading and the future of advanced retail trading is a hybrid strategy where we try to help you automate around some of your behavioral pitfalls. Okay, so let me explain that, right? Let me break it down. What are some of your behavioral pitfalls? Like, Aaron, you're trading now, right? You're a big fucking trader now. What are some of your what are some of your big behavioral pitfalls? What do you suck at? You got to have something. I know you got something.
I guess sometimes being too slow to execute would probably be one of them.
Okay, sure. Okay. Some other people would say overtrading, right? Some other people would say, okay, when I'm up on a position, I get too greedy and then I end up taking for a loss, right? Other people would say, I get too heavy, right? They got an issue with position sizing, right? Mm-hmm. So all of these are behavioral issues that everybody has. Okay, one of the major ones being overtrading and being up on a position and then taking it for a fucking loss. What if the trading history data was good enough that it combined with real-time market data so we could get a clear picture of the trade from start to finish? And we could also Figure out a way to get data on your emotions. What does your face look like? For example, Facebook now has facial recognition all over the place, right? They see the look on your face when you're clicking on something. They can tell supposedly when you're fucking depressed. They can tell what you click on. That makes it, they can tell all these things about you. So we're starting to get into a world where these databases are becoming very behavioral, very emotional, right? We have all this talk about mental health coming around too. So you connect all these pieces here, and all of a sudden we have a picture of a trader that makes a trade from start to finish, right? Let's say he's up, $3,000 or $4,000 on Facebook, right? And he doesn't take the gains, and all of a sudden the shit turns around on him. And we can tell from all these different places, his heart rate, brain activity, all this kind of shit, and then also his trading history as well. All of a sudden now that 4,000 dwindles, right, to 3,000, 2,000, 1,000. What else is he looking at? What is he looking at on the internet to change his mind? How many times, Aaron, do you, let's say, hold on to a position too long, and now you're fumbling? Do you ever go on the internet to try to get your mind off something?
Right.
There's tons of people that'll go on Instagram immediately. There's tons of dudes even that'll go on porn sites, you know what I mean? And just kind of try to get away from what is happening in front of them. And then all of a sudden, that 4,000 goes to zero, right? It goes down to, now you're negative 1,000. Now you're negative 2,000. Now the dumb decisions come out. Maybe you double down, right? Maybe you double down. Maybe you triple down. And now all of a sudden you're down 10,000, right? All of a sudden, if we can look at all of that data and say, okay, 70% of the time, you're up this amount of money on your trade, you end up booking it for a loss. And we can prove to you through the data and through the emotional data and through the behaviors that we're seeing that, hey, 70% of the time you're fucking doing this. What if we offered you some automation that saved you 30% of these losses? Would you come trade with us? Would you use our technology? You think they're going to fucking say no to that, bro? Again, though, we live in a financial regulation framework that if we're going to come into your account and make decisions for you, there's some big repercussions for it. So I don't know if the technology is there yet, bro, for this. I don't know if it is, but it will be. It fucking will be. And I think that is a huge, huge advantage or help, to any trader out there. And I say this on the largest trading podcast in the world. I don't give a shit if you guys steal the fucking idea either, because at least it's out there. I don't give a shit. There's going to be competing products and all this kind of stuff. But I think that type of automation and that type of technology is going to be the future of business, I think, for a good amount of time. Because think of all the other applications too, Aaron. You might have apps on your phone. Now, finally, Apple is rolling out a fucking product or just a feature that can sit there and tell you, like, okay, you've been on your phone for too fucking long. Meanwhile, this is a company who openly says, yes, we know you're fucking addicted. We know your life is in shambles every time you look at this fucking phone. And we know we're taking all of your time, all of your focus. We know we're doing all of this stuff. But now, finally, we're going to go ahead and let you control this shit. Think of how many apps, think of how many applications there would be for behavioral sort of automation that stops you from doing something that you cannot stop yourself. You know what I'm saying? And you cannot trust yourself 100% of the time. I'm talking about 100% of the time. Because all it takes is one time, right, Aaron, for you to blow up your account? That's all it fucking takes. That's all it takes. It's all it takes is for you to have some crazy argument with your daughter's mother in the morning. All of a sudden at 9:30 in the morning, all of a sudden you're fucking yelling at her, and your position here, you're in $100,000 deep of some fucking Boeing calls that you can't even look at. And what are you going to do? What are you going to do? You know what I mean? All of a sudden you come back to this shit, you're down 50 grand. You're toast, man. You're fucking toast. So I'm talking about the moments, bro. I'm talking about the moments in time that we need to get back. And we can't get them back. You can't get your fucking time back. But what if there was a little seatbelt? What if there was a little thing behind you that gave you some of that back, that gave you some of those losses back? You know what I mean? Everybody who had an E-Trade account would come trade with me. Everybody. as long as you could prove it through this data, right? It'd be like, fuck E-Trade, fuck Robinhood, fuck all of this stuff. I'm going with Lucci because, shit, he's going to save me 30% of my own dumb ass. So why the fuck wouldn't I trade with him? You know what I mean? So that's where I believe the trading can go and where it should go. I mean, we're already seeing these guys invest in the virtual reality platforms, which to me, I don't really see that shit catching on, man. I mean, I don't know. I don't know. Maybe it would, maybe it wouldn't. Would you use it? Would you put on some 3D goggles and tap the air to make a trade? I don't know. I don't know.
No. I don't get it. I haven't really seen much of it. I did see something a little while ago, and I didn't really understand. It seemed like a bit of a stretch, to be honest.
Right. Of course. So, I think that technology is going to continue to be involved. Maybe you might have some 3D platforms, and maybe you might have some different ways to execute. But I think in the shorter term here, the behavioral modification, the behavioral help, assistance, because you can't trust yourself. And bro, like I tell my traders all the time, like, you guys can't even for little things, right? You can't expect yourself 100% of the time to always remember to lock your fucking door or to take your damn car keys or to make sure you forget, make sure you don't forget your lunch in the morning. There's nothing we as human beings can do 100% of the time. And when you put that to trading, come on, man. There's so many places that we make emotional mistakes, that we make decisions, based off of emotions that are not good for our account. And nobody is creating that database. That data, I haven't seen that database. I don't even see it being worked on. But that to me is going to be the most important thing. For trading, and I would love for somebody to step up. I myself am starting to work on this, but I would love, and again, there's going to be a lot of exposure here to this talk alone. So come find me. If you guys want to work on this shit, I'd love some help. I would love some help.
So are there any parts of this which you've begun to implement, like for your own trading? Are you working with someone who's using your own data for your specific?
Yeah. So, for example, right, like my writing strategy, and by the way, this is the one that, I'm creating a hedge fund down here in Puerto Rico, and I'm just hiring people from here, literally people from the island. So, nobody from the States, no programmers from the States, none of that stuff. I want to build from here, from this country, with people that don't know shit about fucking trading. They don't know a damn thing about trading, and I don't even want them to know anything about trading, right? Because people who know anything about trading, they come into the situation with their knowledge and their what is the word I'm looking for? Preconceptions or whatever the hell it is about how a market should work and how they should be trading. I don't want any of that. So what I'm doing is I'm looking at my own data, of course, and I can tell, obviously, because it's my trades. I can be like, oh shit, I looked at this trade. I know exactly what happened. I know exactly when emotionally I lost control of the trade, and then I know exactly all the pitfalls after I hit it. You know what I mean? Or took a loss or took a gain or whatever the hell it was, right? So I know myself. So I can look through that data and be like, yep, this is exactly where I fucked up. And then from there, I can create these little automation programs. So I have, a good set of maybe 10 to 20 automation programs just for that. So for example, like for overtrading, right? So let's say, how many times, Aaron, have you gone into one stock and let's say you took a loss on it and you went back the second time and the third time and the fourth time and you kept taking losses? Have you done that before?
Of course.
Of course, right? So let's say the program will say, okay, it'll allow you, let's say 30% or 40% loss on the first trade, okay? Then the second trade, it's going to close that up, right? It's going to make it 20%. And the third trade is going to close that up even more, 10%. And then the fourth trade, it won't even let you fucking make it for a certain period of time, right? So let's say you make 3 trades in a row, you took a fucking loss on it. The program is going to stop you from trading that particular name, any option on that particular name, for at least 30 minutes to an hour. And you can set all that. I can set all this stuff, But that's like one example, right? And then there's another example for position sizing. Let's say throughout 5 years of data, I have an average position size of X, Y, and Z. If I'm over that position size, well over that position size, let's say, it tightens up a loss on it. It tightens up a stop loss on it. And it makes sure that, if shit hits the fucking fan, I don't go down the damn ship with it. You know what I mean? I don't let it go down to zero. And then there's another one where if I'm up a certain percent, let's say I'm up 100% on an option, right? If you're up double your money on a fucking option, and then you take it for a loss, you're just a jackass. That's all you are. You're a fucking jackass, Or if you're up, let's say 200% or 300% on an option and you take it for a loss, you're fucking jackass. People do it all the time, though. I do it all the time. So if I'm up 100%, it's going to lock me at break even. I can't take a loss more than break even for it. And I might get some slippage or whatever on it, but at least it'll lock me there. So little things like this, I'm able to just create small scripts for it that I'm using myself, and then I'm going to employ, obviously in the hedge fund with the new strategy and everything. So most of this is coded for short options, long stock too as well. I'll probably get the futures too as well. But these are just like little examples of things that I know through my own data. This is what I need kind of thing. But now I need to be able to roll it out on a larger scale, just make a database for thousands of traders and build trading profiles for everybody. So just like Facebook is building a huge data profile on you and all your fucking horrible things that you look at and every, crazy thing that you look at on the internet, we got to do the same thing for trading. We got to do the same thing for trading. And that database is going to be so valuable to all the to anybody who wants to take a look at it, so that's kind of where I'm at. So that's where I'm using it right now. So I execute now through some of those scripts that, it's like a seatbelt for me, so that I'm not out here doing the crazy dumb shit that I was before. So if I can save, 30 to 40% of my losses, bro, come on, man. And then the more advanced this technology gets, the more advanced we get the database going, the more advanced we get the programmers to look at this data and say, okay, you know what? Let's try this script. Let's try this. Let's try this. Maybe this will help. Maybe we got to tweak this, that. It's going to take a couple of years even. But I think it's totally worth it. And especially for me, for my lifestyle, for my bottom line, is I want to keep growing. There's a lot of things that I want to do after moving to Puerto Rico. Like, I want a presence in Africa. Like, there's now the technology over there is finally good enough that there's a lot of traders that are popping out of freaking Nigeria, South Africa. They've always been there, but now there's a good ecosystem for it. India, all these places that maybe I could bring the strategy and maybe I could bring this technology, but that's kind of where I'm trying to go. But I can't do any of that shit if I'm out there losing $1 million, Aaron. You know what I'm saying? I can't do any of this shit if all of a sudden I have a bad trade and I lose 500,000. Like, I have to find a way to stop that. So that's where my focus is.
Yeah. That's really cool, man. I like how you shared those couple of examples of the different sort of programs that you've got running for yourself right now.
No doubt.
And just to wrap things up here, something I've picked up on from this conversation, and I think it should be a really good lesson from anyone who's listening to this as well. You're doing things, you're still trading in the same kind of area, but you're doing things a bit differently from when we last spoke in 2015. And,
yep.
That just goes to show that as traders, I know we hear it all the time about constantly evolving in that, but like this is a real example of that,
100%.
We're always
100%.
trying to figure things out. Like, no one has it licked. No one has it mastered. It's always a constant evolution, constant growth kind of thing. So I think that's been really obvious from this conversation.
No one does, man. And I could go in a whole diatribe right now of just stuff that I see in the trading world that gets me so upset. You know what's popping down here in Puerto Rico, Aaron? You're not going to believe it, but again, like, it's a Forex. It's the Forex pyramid schemes. It's the Forex.
That shit's so bad.
You've heard of this, man. Yo, I'm telling you, man. In Puerto Rico, man, there's and again, like, all of these network marketing companies, all of these MLM companies, they exist where? Where do they exist and where do they proliferate? They always proliferate in places where people have less opportunity. They have less opportunity and less knowledge and less, whatever you want to call it, than, a place like New York City, let's say, a place like these well built up places like San Francisco and all this kind of shit. You'll always see these MLM companies pop up in places like this. And I went to these. I literally went and sat in on one of these things, and it was literally just a rah-rah. You can change your life type of thing, and all you got to do is get 4 people to sign up under you, and they can trade and they can change their lives. And bro, they have literally a saying, and this is the saying that gets pervaded obviously in every single. This is the way they sell you. It's like they say that, oh, you have a smartphone here. If you're not making money from your smartphone, then it's a stupid phone, Aaron. Like, that's what they're saying. That's what they're fucking saying. They're saying make money from your phone, and that's what they do. And people buy into this shit. They feed them thousands of dollars, and they buy into this shit, bro. And I see this stuff, and I'm like, oh my god, man,
that's brilliant.
Oh, this is brutal, and we have to sit here and watch this shit. You know what I mean? And we know, you and I know, bro. You've seen from all the people that you've interviewed here that this shit is not. It's not an easy cookie cutter thing. It's not something where you can open up your phone and be like, oh yeah, I'm gonna make this trade here, and I made a couple $100. Boom, I'm out. You know what I mean? Like, it doesn't happen like that. It doesn't happen anywhere in the fucking world.
Yeah.
You know, exactly. We're gonna do the same thing tomorrow, and then by the end of the year, you're gonna be here. Like, it doesn't fucking happen. And when I look at it and I see it, I get so frustrated. But that's the world, right? Wherever there's a hustle, it's easier to sell the hustle than it is to actually, make the money on it. So with that in mind, like, dude, all the things that have happened to me in my life, like the losses, the successes, the ego, the depression, you add all that shit up, and that's what actually brings you to where you are. I'm only here because of all that bullshit I had to go through, to get to this place. And then, to wherever the next place is going to be. I gotta continue thinking about that. But instead of me looking at it from the money thing and chasing after the success, I looked at it as, you know what? If I get a certain type of market, I'm going to make money. Like, I know who I am. I know what I'm capable of doing. Like, all I have to do is figure out how to save my dumb ass from making the same stupid decisions that I made, in the past. And again, you can't save yourself from all of it. It's not possible. But at least you can learn new tricks, new ways, and new decision-making skills, whatever it is, to keep yourself from those issues. So that's all I'm focused on. So the money is great. Yeah, fine. Okay, I made $100,000 in one day, or I made $200,000 in one day, or I had $1 million month. That's great. But who the fuck cares if next year you don't have that shit? You know what I mean? Who the fuck cares if 5 years you still where you at and you lost all that money, or it's another problem that kind of came out. So now I'm kind of just focused on how do I stay here? What do I have to do to stay here? And that mentality alone, Aaron, is the only reason that I created the idea of the behavior thing, the idea of the hybrid automation thing. So we all go through what we go through, and provided you stick to what you're doing, you're going to continue to evolve, and you are going to find the right path. Problem is just most people they can't stick it out, man. It's too difficult, and I don't blame them, man. It is fucking difficult, man. It is, but that's where I'm at.
Right. Yeah. As you said, man, you got to stay alive.
Gotta stay alive. That's it.
All right. Well, good catching up, man. It's been a while. I think the last time we spoke, was when I was in New York. That must have been, was that last year?
Now look at you, man. You got the most poppin' podcast for traders in the fucking world, man. Congratulations, bro.
Thank you very much. Yeah, I've dialed it back a little bit. I'm not doing episodes quite as frequently. Other things are sort of taking priority, but it's definitely, as you said, staying alive. I'm keeping alive, and I'm still, pushing out episodes just a little bit less frequently.
Sure.
If someone wants to catch up with you, best places on Twitter.
Yeah. Best place on Twitter. I mean, it's saying Lucci everything. You can send me a comment anywhere. I think the best place probably is on Twitter. You can email me, Lucci@sayinglucci.com. But yeah, DM me on Twitter or hit me up on Twitter. That's probably the easiest. I'm heavy on Instagram now, but I still don't understand truly how to do this shit. Like, you got to be fake as fuck on Instagram to get, you know what I mean? I look at all this stuff and I'm like, dude, I can't do this shit. I can't do this. Like, some of your stuff, I love it because you already have the traffic and everything, and it's just like, you know, nice quotes and, you know, just kind of like nice pictures like that. So that does well too. But finance is tough, man. Finance is tough. It's tough to not look like a douchebag. But all finance, like anybody who's selling a product, let's say on finance or whatever, like they spend a lot of money for photography. They spend a lot of money for videos. They spend a lot of money for all this stuff, man. And I don't know, man. I still have a problem with it. But
yeah, I haven't really gotten into Instagram. Like these days, all I do is I just post the episode on there.
Right.
But Twitter's pretty much my go-to. I like Twitter. Instagram, I could probably do more with it, but again, got priorities. Indeed,
man. I still got to come out to Australia, man. I still got to come out.
For sure. You should do that. All right, well, let's call it a wrap. Great catching up, man, and we'll chat again soon.
All right, take care, Aaron.
You've reached the end of this episode of Chat with Traders, but rest assured, there are more episodes loaded with real market insight and zero hype on the way soon. So to stay updated with each great new release, subscribe to the podcast in iTunes, and we'd love it if you'd leave a rating and review. We'll catch you next time on Chat with Traders.